Hi everyone, and welcome back to another weekend market update. My name's Tim Fairweather, and today I'm going to be reviewing the DAX 40 futures chart and the cash index. So let's go and take a look. So you can see here, we've got the monthly chart. So far, we're just over a week into the month, and we had a bull bar here. It triggered the buy above that bull bar. It was a disappointing entry bar for those bulls. So there was a chance if a bull bought up there that they could have gotten out. Other bulls are not worried about that bar. They know if they buy here, they know they've got room to the moving average. If this is their signal bar, there's probably buyers below. The last gap is very far away, so the bears are going to have to do a lot of work to reverse this bull channel. The bears see this as 1, 2, 3, a third attempt to reverse, but they haven't been able to trigger a sell signal on the monthly chart. So if they're able to go below October, that would be the first trigger. So bullish on the monthly chart. Here's the slide I prepared for the Brooks price action blog. DAX 40 weekly bull channel. Everyone can see that. Low 2, second attempt to reverse. We broke out of this breakout point, tested it once. Now we're coming back to test it a second time. You can see there's a body gap, or what Al calls a negative gap, which means the bears were not able to close below that breakout point. And that's very important, because if we've broken out, if the bulls have broken out above the top of a range and the bears can close back in that range, then it's a failed breakout. You can see here, bull bar breaking out of this range, no follow through. The moment the bears are able to close within this range, look what happens. We shoot back into that range. And that's because if I'm a bull, my stop's very far away and my target is very close. And the bears have the opposite. They have a very small location for their stop and a very big target. And the computers instantly take advantage of that and bet the other way. We're still hovering around 19,000 and the bulls are going to defend this. They don't want to get back into this, because this is a much bigger trading range. The next gap is very far below, and I suspect that will stay open. I'll change my mind if over the next couple of weeks, a sequence of bear breakout bars closing below the moving average. Now let's take a look at the weekly chart. You can see we were talking about that test for the bull close up here. So the bulls who bought there had a chance to get out of that position here. Other bulls that bought here, if a bull bought the close of that bar on the monthly chart, if they bought more below, they were able to get back to their break even. They had no need to buy below this bull bar. So I don't think any of those bulls are stuck. A bulls who bought this high one break out to a new high and then a buy signal bar. Here, if you bought the close or bought one tick above the high, that's your signal bar. You've got a great entry bar, and we have not gone below that signal bar yet. So if we do go below there, we've got 19,000. We've got a micro double top. I suspect there'll be more buyers there. And at the moving average, we saw in the prior week, there was a very steep drop off and traders were concerned that we were going to go much lower. But even though I was surprised by the bear momentum on the way down, I thought we would get back to the daily moving average. So let's go and take a look at that as well. So we're still in a bull channel. The bears would like this to be a wedge and to get a couple legs sideways to down. They probably see this as starting one of those legs, but look at the inside bar this week. It's a bad sell signal. It's a bad sell below. I think we're going to drift sideways to up. Here's the slide I prepared for the Brooks price action blog. DAX Daily, triangle at the moving average, higher lows. Bears want head and shoulders top. You could draw it this way: left shoulder, head, right shoulder. There's also a mini one here: left shoulder, head, right shoulder. The point is there are lower highs and there are higher lows, because there are good reasons for bulls to be long and bears to be short, and currently stops are not getting run. We turn into a tight trading range. What was bad for the bull case is that they were not able to trigger one tick above the high of that bar. What was bad for the bear case was that they also could not trigger one tick below these bars. And that shows you that it's not a great environment for a swing trade, and mostly traders are trading with limit orders and fading breakout. Now we've got DAX on the daily chart. This was the strong sell-off that traders were concerned about, seeing this as a lower high double top, a version of a head and shoulders top, left shoulder, head, right shoulder. This was a higher low, though not technically, more of a minor higher low, and then a measured move down. Traders contacted me saying they thought this could go much lower than 19,000, and I thought that the gap was so far away, we're testing a breakout point, it's more likely that this is going to go back to the moving average. Bears got their follow through down here, big tail. No one wanted to sell with a stop all the way up there. And you can see if you had a stop up there, if you sold the close of that bear bar, you had a chance to scale in higher to then get all the way back to that sell. So traders that took that sell, I think it's a low probability sell because I think we're at support. We've got a tight trading range here. The moment those bears got out, bulls bought, betting we get back to the moving average, but there are no more gaps up here. So we're in a trading range, and in a trading range, you take a swing point, you take the top of that range, and you can see right at that lower third, a lot of traders were buying. They were betting we would not go too far past 19,000. They were betting that the stop was too far away from the bears and that there was possibility to scout back to the moving average and potentially up to let out any bulls that bought all the way up here. You can see if I'm a bull and I bought above the bar, I bought the close of that bar. It's not a strong buy signal to buy above. It's a bull doji, but at best a buy the close. Betting this is a high 2 for a new high. It fails, traders scale in and they get back to their entry. And now the bears have done exactly the same. We're in the top third of a trading range. This is a big bull bar closing on its high. What happened? Traders sold it. And now we're forming what I said a week ago, which was that we're going to form a triangle here. And we're oscillating around about 19,300. Bears now have a lower high double top. Bulls now have a higher low double bottom, and the reality is we'll squeeze into a price then into breakout mode. So it's a little bit tricky to trade the daily time frame. Are we always in long or always in short? Well, on the way up, if that's a swing point, we took it out. Higher lows, we took that out. If the stop location was here, the bears will say we're always in short. If they use that swing point, they did not get stopped out. So because it's confusing, we've got lower highs and higher lows. I think breakout mode, we're hugging the moving average, and I don't think we're going to get too far away from the moving average. A bear day down, we'll probably go back. If we have a strong bull day up, we'll probably come back. Just one other thing I'd like to point out about the daily chart is that we had a big bull bar closing on its high. The high of that bar is 458.6. The high of this bar is 458. So we did not trigger any buy stop orders above that bull bar. There is potentially buy the close bulls there who are more than likely going to buy lower and get back to their break-even point, which is somewhere around the moving average. You could sell below that bear bar and get filled on this bar. You couldn't sell below this bar. You couldn't sell below this bar either. You couldn't sell below that bear bar. So it'll be interesting to see on Monday if the bears are finally able to sell below this bar. We can see on the FDAX, the futures contract, the same thing. So I just wanted to check that no bulls were triggered in above that bar. That's important because when I'm looking at our traders using stop orders, which is a main part of our book's trading course, I'm looking to see if a trader buys one tick above that bar, do they get trapped? If a trader sells one tick below that bar, do they get trapped? And you can see no one is getting trapped on those trades. So DAX, I think sideways to up still on the weekly, even if on the daily chart we dip below this breakout point and back to 19,000, because we're still on a bull buy signal in a bull channel. I've got to give the percentage to the bulls that they're going to succeed in defending this stop. I don't think that's the kind of sell signal I really want if I'm short. I think the best sell is going to be above these bars and higher, as opposed to below these bars and lower. So thanks very much for watching. I hope you found that valuable. That was another weekend market update.